Hey everyone! So if you're new to investing, I bet you've bumped into this exact question, stocks versus ETFs. It sounds pretty simple, right? But getting this right can totally change how you build your wealth.
So, which is it? Should you buy a single stock or an exchange-traded fund, what we call an ETF? By the end of this little explainer, you're not just going to know the difference, you'll have a super simple way to figure out which one is the right move for you.
All right, to make the best choice, we first got to know what we're actually working with. So let's break it all down. I've got a simple analogy that's going to make this whole thing crystal clear. First up, the stock. Okay, imagine you're at this gigantic orchard. You walk around, you look at all the trees, and you pick out one single apple. You've checked it out, you think it's absolutely the best one, and you're pretty much betting everything on that one apple. Well, that's a stock. You own a tiny piece of one specific company. And then you've got an ETF. This is like buying a pre-packaged fruit basket from that exact same orchard. So instead of just one apple, you get this whole collection. Apples, maybe some oranges, a few bananas, all in a single purchase. You're not betting on any single piece of fruit, but on the success of that entire basket.
Now, before we start pulling them apart, let's just take a look at why they get compared so often in the first place. They actually have some really key things in common. And honestly, this is where the confusion usually starts.
For starters, both of them trade on major stock exchanges. What that means for you is that you can buy or sell them pretty much instantly anytime the market's open. They both have the potential to pay you dividends, and in both cases, you always know exactly what you own. That transparency, it's absolutely crucial. Okay, now we're getting to the good stuff. This is where it all clicks. There are three key differences, and really, understanding these is going to define your whole investment strategy. This is what truly matters. So the first, and I'd argue the most important difference, is diversification. With an ETF, that's our fruit basket, remember? If one of the apples goes a bit bad, it doesn't really ruin your whole investment. Why? Because you still have all the other fruit. But with a single stock, our one prize apple, if that thing goes bad, well, you've lost everything. ETFs automatically spread out that risk for you. Okay, this next difference, it really just comes down to your time and your effort. See, with an ETF, you've got a team of pros who are managing that fruit basket for you. But with individual stocks, you are the manager. You have to do all the research on the company, its financial health, what's going on in the news. It's really the difference between a hands-off approach and a very, very hands-on one. And finally, let's talk about cost. That professional management you get with an ETF, it comes with a small annual fee, and it's called an expense ratio. Just think of it as the tiny price you pay for the convenience of that pre-made basket. It's usually just a fraction of a percent. Stock trading, on the other hand, is now often commission-free, which means you might pay absolutely nothing to buy or sell. Looking at this table, you can really see the trade-offs at a glance, can't you? On one side, you have ETFs, giving you instant diversification and professional management for just a small fee. On the other side, stocks offer you total control, potentially with zero fees, but all the research and all the risk is on you. This is probably the perfect slide to screenshot for a quick reminder. Okay, so with all of that information out on the table, we're back to our big question. But the cool part is, now you actually have the tools you need to answer it for yourself. So let's turn all this info into a real strategy. And let me be clear, there is no single right answer here. The best choice depends completely on your goals, how much time you have, and frankly, your personal comfort level with risk. So an ETF is probably a great fit if you're looking for a super simple way to get diversified right out of the gate. If you're the kind of person who prefers a set-it-and-forget-it style of investing, or maybe you want to invest in a whole sector like technology or healthcare without having to pick the one winning company, then yeah, ETFs are basically designed for you. But on the other hand, you might be drawn to individual stocks if you're really passionate about certain companies and what they're doing. If you genuinely enjoy digging into financial reports and you want precise, total control over every single thing in your portfolio, then picking your own stocks could be incredibly rewarding. But here's the real secret, the one that so many smart investors understand. It was never really an either-or choice. As this quote here shows, the real goal isn't about picking one over the other. It's about figuring out how to make them work together. So let's just reframe this whole debate. The powerful question isn't stocks versus ETFs. It's how can I use the safety of ETFs as my foundation and then add individual stocks to target specific companies that I'm truly passionate about. That is how you build a portfolio that's powerful, and even better, uniquely yours.